What is going on, my people? I just got one of my white labels clients approved for over $95,000 in 0% interest business credit cards. And they use this to completely transform their business. The $95,000 will cover inventory, marketing campaigns, and equipment upgrades. And this all without ever touching high interest loans. And here's the wild part. These clients didn't have years in business. They didn't have a perfect, immaculate credit, and they didn't have a massive revenue. All they had was the right setup and the strategy that most funding companies don't even know exist. And in this video, I will walk you through exactly how I did it step by step so that you can use the same method to get your own clients the maximum of funding approvals without the typical bank turnarounds or endless documentation requirements. Now, if you're a funding company and you're stuck on getting your clients denied, or approved for pocket change, this is going to change everything for your business. Now, this client already had an LLC open, but it wasn't set up properly, so it needed a little bit of optimization. And none of this credit and funding would have ever been possible without setting up the business the right way. And I'm not talking about just having them open a new LLC and calling it a day. I'm talking about setting up their business so that it's actually fundable. Because when banks and lenders look at it, they want to see a real company and not just a side hustle. And this is where most funding companies mess it up. And I almost did too at the beginning, because when you're just starting out, you don't realize that how your client's business is set up will decide whether they get a $5,000 limit or a $50,000 limit. So the first piece of optimization that I had my client do was set up a proper business address. This is one of the little details that can make or break their approval. Most funding companies, they let their clients use their home address, and that's a huge mistake. Unless, and this is a tip, unless you're applying for Wells Fargo. For them specifically, a home address is often better than a virtual address. But based on historical data, businesses that use residential addresses default on loans way more often than businesses with commercial addresses. So just having a home address listed can automatically put your clients in a high-risk category. And it gets worse even more if they use a P.O. box, which most lenders do not accept a P.O. box as legitimate business addresses. So here is what I had my clients doing instead. We got them a virtual business address to services like iPostal One, and this will give you a real commercial address that you can use on all your legal documents, EIN application, bank accounts, credit applications, everything, basically. So the only thing that you have to make sure is that it's a true commercial address and not a UPS store disguised as a PO box, because some majority of lenders will catch that and they will notice and they will deny you for it. Next, I have my clients get separate phone numbers and business email. So this might sound small, but trust me, it matters way more than you think with lenders whenever they're evaluating your applications. So we use the call 8 to set up an actual business line. If you want to elevate your clients even more, you can go for a 800 number, and this will make your business look bigger and more legitimate instantly. Then we set up their business email. I'm not talking about just yourbusiness@gmail.com, because that looks like an amateur for the underwriters. We actually bought a domain and created a branded email like info@mycompany.com. This will cost you like $10 a month, but it will make the credibility of the business and will make lenders take you more seriously. All of this can be optimized by filing an amendment if the LLC is already created. If not, you can go ahead and create the LLC right in the first place. Now, first, the thing that you need to check is the name of the business, and that is not taken or trademarked. So before my clients picked the new business name, what we had to do was run a trademark search in the USPTO website. And if they chose a name that was already trademarked, then they could get hit with a cease and desist or even worse. So next, pick the name. Make sure that you're avoiding high-risk industry names. Even if the name sounds cool, certain words can automatically get your clients denied for funding. So if their business includes words like credit, loan, real estate, broker, or insurance, it can trigger an instant rejection. So I would recommend keeping the name something simple like last name enterprises. And then later on, they can file a DBA if they want to operate under a different brand. So once we had the name locked in, we filed the amendment with their Secretary of State. Next, he already had the EIN number, so we just called to make sure that we had all the changes with the address and the new name that we had picked. If not, just go to the irs.gov if you don't have it already and file for the EIN. And this is totally free. You can get in within 5 minutes from the IRS website. Make sure that everything matches the address, the name, the business, the emails, everything has to be exactly the same. If not, lenders can get confused. And that's one way of getting your business flagged. So once we had all the legal structure, the business address, the phone number, the email, the next move was opening the business checking account. So this step is massive if you're serious about getting your clients funded. And obviously you can't skip this, because how can you expect to get approved for a credit card if you don't have a business checking account to pay that off with, right? So here's also why this matters so much. The day of your clients open their business bank account is often considered the first official day starting the business for the lenders, even if they filed the LLC 6 or 7 months ago. So if they opened their bank account last week, they basically started last week. So the sooner they open it, the better. When you're picking the bank, you should be picking a bank that your client actually wants to build a relationship with. And this is a relationship game. The bank they choose can impact the kind of credit products that they may get offered, how high their limits go, and how flexible underwriters are with approvals. A lot of financial institutions, especially credit unions, love working with customers that they already have a relationship with. So if they already see your clients' deposits, balances, and activities, they're more likely to extend credit afterwards. Now, I have my clients choose a bank where they could build trust. After the client opened his business bank account and everything was set up, we applied for the DUNS number, which is like a credit profile ID for their business. And this is issued by Dun & Bradstreet, and you can get it for free from their website. Your client needs to have this to build their business credit. You just have to make sure that the name, the address matches exactly with the same one that you used to form the LLC or to file the amendment. And opening the bank account, of course, because the lenders won't always tell you why your client got denied, but 9 out of 10 is because something didn't match, some information didn't match. Now, before I get into the actual funding strategy, let me be real with you. Everything that I'm sharing in this video works, but it takes time to implement correctly for each client. The business setup, the banking relationship, the credit optimization, it's a lot of moving pieces. Inside of my community, we have all these systematized for funding companies. We know exactly which banks are approving in which state, what credit bureaus they're pulling from, and what the current approval requirements are. We track all of this data so that you don't have to guess with your own client. If you want to access to our complete funding database and step-by-step client implementation guide, there's a link in the description to book a call with my team. We'll show you exactly how to fast-track this entire process for your funding business. Now, let me continue with the strategy so that you can see the full picture of what got my clients approved. Now, the last step is choosing the right industry code for your client, also known as the NESES code. And this is a 6-digit number that will tell lenders what type of business they run, meaning like in what industry they categorize themselves in. Lenders will use the NESES code to assess how risky your client's business is. Some industries are seeing higher risk, like credit repair, cannabis, car dealers, travel agency, and other like consulting or B2B services are viewed as lower risk. Now, many businesses qualify for multiple categories, so choose wisely. You don't want to misrepresent their business, but you also don't want to unnecessarily put them into a higher risk category. Now, let's move on to your client's personal credit. So forget everything that you've heard about net 30 vendors or waiting months for random trade lines to show up, because that's the slow road. It takes way too long. The faster and most efficient way for your clients to get access to large amount of business funding without paying interest is by leveraging their personal credit the right way. Realize, even though business credit cards report to the business credit profile, approvals are still based on their personal credit, especially for any funding that's worth. Now, here are the personal requirements I recommend for your clients to get approved, and these are bare minimum. Now, you will need a 680 FICO score, 720 plus is ideal, no negative items, credit usage under 30%, ideally in the 10% range, so you don't want to completely at zero. 7 to 10 primary accounts, primary, non authorized users. 3 plus personal credit cards with a $5,000 minimum limits. One card from a tier one bank with a 10,000 limit, like from Chase, Bank of America, Citi, Wells Fargo, so on and so forth. And at least one of their accounts that is 2 years or older, and $10,000 on average on total credit limits. 3 or fewer increase per bureau in the last 6 months. And if your clients check all of these boxes, they're ready to start applying for 0% business credit cards. If their credit isn't quite there, don't worry. Like, most clients will need 1 to 3 months of optimization on average. Once my client's personal credit was out, we moved into the funding phase. And this is where all the preparation pays off. Within a few days, they got approved for over $95,000 in business credit cards with 0% interest, and that gave them up to 18 months to use that money. Now, business credit cards are different from personal credit cards, but in a good way for your clients. Most of them don't report to personal credit, so their utilization always stays low. And they often come with higher limits when you know how to apply, and you can stack for multiple approvals quickly. I specifically targeted banks that had a strong 0% APR promotions, and these credit cards that let your clients borrow money with no interest for 6 to 18 months. This gives them time to use their funds, grow their business, and pay it off without getting hit with high interest. Now, some of these cards I like to target for clients include the Chase Ink cards, the American Express Blue Business Card, US Bank, and the Citizens Bank. These are solid lenders with strong approvals history and good intro offer for your clients when their personal credit is where it needs to be. Now, I want to talk about the specific strategy and application sequence. Now, I applied in a strategic sequence, also known as a specific funding round. This is a key concept in the funding space. A funding round is basically a planned application run where you apply for multiple business credit cards in a short time frame. Usually you can do a round every 6 to 12 months. The goal is to spread application across the banks that pull from different credit bureaus, so you don't have to stack too many inquiries into one report. Since they were in California, I knew that Chase and American Express were going to pull from experience. So we started with those first, then bank which pulls from Equifax. Keep in mind that which bureau pulls from will depend on where your client lives. Someone in Florida or in New York may see different results than someone that is in California. So as a rule of thumb, you don't want to have more than 2 to 3 hard increase per bureau during a funding round. That gives your clients the best odds of approvals and the highest possible limits. Card strategically. One of the most common ways to pay your business expenses that would normally require cash or high interest loan. With most contractors and vendors, they don't accept credit cards, but you can get around with some services or a check even when you're paying with a credit card. And usually the fees are around 2 to 3%. But since your clients are using 0% interest credit cards, that way it's still cheaper than taking out a loan. If your clients are in businesses like e-commerce or consulting where most expenses go directly on a business credit cards, then this becomes a no-brainer. Now, if your clients needs the cash on hand from their credit cards, not just the paying vendors, there are liquidation services for that, and the fees are normally 6%. So if your client has $100,000 in available credit limit, they can liquidate up to 90% of it. So $90,000 of cash minus a 6% of the fee. This is still better than most unsecured loans, which carry 10 to 20% of interest or more. Even though there's a fee, the flexibility that it gives your client is an easy path to capital without needing to be in business for 2 years or show extensive documentation. Now, Everything that I covered in this video, you can most definitely implement for your clients. But I know that some funding companies don't have the time to learn every detail and time the applications perfectly or deal with different banks for each one of the clients. The funding companies that are really winning are the ones who are doing $70,000 to $100,000 per month, and they have the system dialed in. They know exactly which banks to target for each credit profile. They have the banking relationship, and they have the process to get maximum approvals constantly. If you want to implement this complete system into your funding company and you want to access to our database of what's working right now across all banks, you need to book a call with my team. We'll show you exactly how to combine these client setup strategies with our complete marketing system, our approval sales process, and everything else you need to scale past $50,000 per month. The link is in the description. Don't let another month go by and watching your competitors get better approvals while you're stuck using outdated methods. This is Clarissa, and I'll see you in the next one.